Good afternoon. It's Jeff Christian. It's Friday, the 2nd of October. We've made it into October. It's the afternoon. Gold prices are trading around 1909 as I'm speaking to you. The price had spiked up to 1923 earlier today on news that the president and first lady had tested positive for COVID-19. The stock market had fallen about 450, 500 points in the overnight pre-market at the time. After that, there was some calm that came, or perspective that came into the market. I'll talk about that in a second. Gold came down and tested 1895, and as I said, it's around 1909 right now, Friday afternoon. The stock market opened up down 250 points or so, and actually the losses paired themselves even further. And I think what you were seeing was that the markets were gaining perspective on what it means for the president to have tested positive. First off, 85% of the people who test positive are asymptomatic and don't have a problem. Second thing is that, yeah, he is 74 and grossly overweight, but he'll probably wind up being pretty much largely asymptomatic. And even the 15% that do have symptoms, the vast majority of those people don't get hospitalized. Their symptoms are crashing headaches and fevers and vomiting, and then after a couple of days, it's over. I think that this is a sideshow. What's really important to gold and silver and stocks and everything else and currency markets is what's going on more broadly. The pandemic is now entering the second phase in Europe and the United States. Legitimate health experts expect that while we've lost about 200,000 people in the United States so far in the pandemic, by Christmas time, the total fatalities in the United States may be 400,000, or roughly double what they are now. So the pandemic's getting worse, and its economic and social consequences will get worse. You have an economic environment that is doing what we thought would do, but seems to be surprising some people who are more optimistic than us. You had an initial recovery after a sharp plunge in economic activity in the second quarter, and now you're starting to see a flattening. It's going to be a much slower, tougher slog. We said that it wasn't a V, it wasn't a U, it wasn't anything else. What it was more like one of those symbols that you use for square roots, where you have an initial rebound and then sideways to slightly higher slow growth rate. That's what you've seen in the recovery phase of most economic cycles, and that's what you should expect this time. And the data that we're seeing, today's employment rolls and other data on consumer spending and industrial production, all point to the same sort of thing. So we have very major economic problems. We have a stalemated government in the United States that's not doing squat about getting very necessary and very needed additional economic support packages out. You have a pandemic that's getting worse, and you have a social and political environment that's getting worse. The risks of political violence in the United States have risen measurably over the last 3 or 4 days. They were already very high, higher than they had been at probably any time since the 1930s. And I think that those are the real issues: economic problems, political problems, social problems, and public health problems. Those things are all going to be problematic in October, the rest of the year, and into 2021. In our precious metals advisory for September, we talked about the fact that nothing really is going to improve magically just because we go from 2020 to 2021. And 2021 is going to be a continuation of what we're seeing in late 2020. All of that suggests that our gold price projection is still intact. And our gold price projection is that the price probably will spike much higher, over 2,000, maybe even over 2,100 over the next 3 months as we sort through these economic and political problems and as the pandemic gets worse. Price may come off a little bit after that, but the reality is that the economic and political and social and financial market conditions that we are seeing now, that we'll see for the rest of the year, and that we'll see well into 2021 and probably beyond, will be supportive of investors saying, I should have more of my wealth in gold and silver, and they'll be buying enough gold and silver to drive the price higher. So as far as we're concerned, it's steady as it goes. We saw $110 sell off last week in the gold price. We've made back more than half of that. And we'll probably, in our expectation, move to new highs in October as we approach the election, and in November as we sort through what really happened in the election in the midst of probably some very dangerous political violence. On that happy note, have a good weekend. Keep your hands clean, and as the president probably would tell you now, you should wear a mask. Thanks.